Hello, I'm Katie Kelly. I'm the Senior Director in Market Practice and Regulatory Policy at ICMA, and I provide Secretariat services to our ICMA Corporate Issuer Forum and our ICMA Financial Institution Issuer Forum, each of which is comprised of the heads of funding of some of the biggest corporate and financial issuers in the Euro markets. It's my pleasure to be joined today by Maureen Baker, who is the Global Head of Funding and Capital Markets at ArcelorMittal, and is also a member of the ICMA Corporate Issuer Forum and Steering Committee, and Peter Green, who is the Head of Senior Funding and Covered Bonds at Lloyds Banking Group, and is also a member of the ICMA Financial Institution Issuer Forum and Steering Committee. So thanks, Maureen and Peter, for joining me today. Starting with you, Maureen. It's been a pretty tumultuous 18 months for the markets generally, but in particular, how do you think corporate issuers have fared over the last 12 or 18 months, particularly in the face of post-Brexit dynamics and the challenges imposed by COVID-19?
I think that they fared very well, in fact. I recall 1 year from today, one of the primary topics at the Corporate Issuer Forum, maybe not 1 year from today, but in June of 2020, a very important key topic for us was COVID-19 disclosure of the risks surrounding COVID-19, as well as, so for the company, as well as for the execution of capital market transactions. And in fact, some very major, important, innovative transactions were executed in this time period while working from home. Brexit, there was very little, there was no disruption in the market as far as issuers were concerned, to the very best of my knowledge. And so I would say overall we fared well, especially while taking into consideration the fact that we were all working from home.
Thanks. And Peter, what about on the financial institution side?
I think a sort of similar experience to the one that Maureen's outlined. I mean, certainly we've had to adapt to how we work and new ways of working, and I think we've all been pleasantly surprised how efficient some of the system adaptation has been. I think from certainly from a UK bank perspective, and echoing Maureen's comments again, Brexit was sort of seemingly a non-event. I mean, we got through the end of 2019 with limited impacts from Brexit itself, and over the course of sort of 2020 and sort of 2021, we've seen the gradual re-engagement of European investors to UK credits, and hopefully we've seen the end of the dreaded Brexit premium as a concept for UK issuers. I get COVID-19 was clearly the big story of 2020. We all had to deal with huge market gyrations in terms of spreads, but thankfully credit markets continue to function pretty pragmatically, albeit at spreads that we didn't necessarily want to be issuing at. We did have to deal with high levels of investor sort of queries around impacts from lockdown, the economic impacts of COVID-19 and how it was impacting our balance sheets. And I guess one of the main changes over the past 12 months has really been some transformational impacts on balance sheets, certainly bank balance sheets, where we've seen high levels of deposit inflows. We've seen government support schemes in place for liquidity, and overall amounts of wholesale funding needs from bank balance sheets being much reduced, which sort of clearly creates sort of challenges and opportunities for the coming years.
So not necessarily any interrupted access to funding and generally continuity so far over a very difficult period. Peter, staying with you, if I may, what do you see as the big topics or challenges or opportunities for the financial institution issuer community when you look ahead to the next 12 months?
Yeah, it's a good question, and I sort of struggle to sort of see beyond, a topic that's, certainly very close to your heart, and certainly very close to, to my heart. But LIBOR and LIBOR discontinuation clearly is going to be a big challenge for the market. I think certainly from a UK market perspective, we've seen a huge amount of progress to date, but there's still work to do, and sort of clearly a big push from issuers and from benchmark authorities, and sort of market-wide effort to make sure that we achieve the transition targets at the end of 2021. Other sort of challenges, certainly from a bank balance sheet perspective, there's a number of sort of regulatory sort of changes, particularly around risk-weighted assets, that could create headwinds in 2022. And then, looking more broadly, sort of clearly inflationary pressures within the market, it's a key theme for today. And I guess how that translates into impacts on credit markets and funding markets, we'll see. Fingers crossed that markets continue to be pretty sort of stable and pretty functional over the next sort of 12 months or so. I think sustainability clearly is going to be a topic that continues to be close to issuers and investors' hearts. I think as a bank issuer, we're particularly focused on developments in sustainability bonds, and there's one or two structural challenges that we may have to overcome for bank capital and MREL sort of transactions if we want to pursue sustainability bonds as a viable funding tool. But overall, I think there's lots of opportunities for issuers. Sort of clearly, continued positive conditions, for credit markets will be beneficial. But obviously, lots of positive opportunities to engage with investors around I guess hopefully some positive trajectory in terms of opening up from lockdown, economic growth, and a little bit more prosperity than we've become accustomed to speaking about over the last 12 months or so.
So quite a positive outlook, really. And Maureen, does this all resonate with you, or do you foresee a different landscape for corporate issuers over the next 12 months?
No, I would echo what Peter has had to say. So for corporate issuers, clearly liquidity and transparency will be very important going forward, and regulation will be very important for us. And ICMA, we look to ICMA really for a lot of help in that area, and a lot of education. And for me, since joining ICMA, I can be a little bit more relaxed about regulation because I know that you will keep us updated. And then, the market outlook is very good. And most importantly, I would repeat exactly what Peter said with regard to sustainability. So I think that is a huge global mega trend. And I believe that issuers will be navigating their way around green bonds, transition bonds, sustainability linked bonds, use of proceeds bonds, general corporate purpose bonds, ESG disclosure. This will be a very big area for us.
Okay, good. Well, Peter and Maureen, you're both very fully embedded in ICMA's work generally via your respective issuer fora. But can you perhaps explain how ICMA's issuer community generally has engaged with other ICMA stakeholders and influenced day-to-day work over the past year or so? Maureen, can I start with you?
Sure. So the first thing that comes to mind is, of course, the Sustainable Finance Committee, which brings issuers together with banks, investors, etc. So that has been a really fantastic engagement for us. On top of that, there's also the commercial paper. So European commercial paper and issuers have had a chance to engage with the other issuer forums and the banks, investors, etc. So that's been very helpful. And also the third area is fintech. which is a really interesting area for the corporates. I don't think we're nearly as knowledgeable as the financial institutions are in this area. So that's that engagement has been interesting for us.
Okay, great. And Peter, from your perspective?
Yeah, I think it's, I mean, sort of clearly, ICMA is, it's very proactive across, a range of areas. I think, most notably to me, it's going back to the LIBOR transition issue. So clearly, yourself, Charlotte, Paul, being, instrumental in the progress that's been made on, LIBOR transition from a bond market perspective. I think there's a huge amount of pride that can be sort of taken from the work that has been done and continues to be done, and sort of just drumming up the enthusiasm that you bring to the committees and sort of keeping the engagement levels very, very high. So clearly it's a hugely important area that we're all focused on. But I think it's been it's really to the credit of the ICMA team that as much progress has been made to date.
Well, thank you both very much for your kind words. And I think that concludes our discussion with the issuer constituency. So thanks, Maureen, and thanks, Peter. And thank you to those who are watching.